Usually it moves with Zoom, but I don't know. It's not censoring it, so it's fine.
All right. Well, we're
We're going
live
live?
now. We are live. Yes. So we may have people joining us on StreamYard. We also have people on Instagram, LinkedIn, and YouTube, and it's all being streamed live as we go. And there is a chat. If you're following us on StreamYard and YouTube, there's a chat that you can comment on and ask questions as we present. And yeah, and then we'll just keep it going. So this will probably be a 20 to 30-minute presentation. We want to make it, as valuable and as informative for you guys. And then we'll dedicate some time to Q&A, wrap it up, and record the whole thing. So for those of you who jump in late or didn't get to see the whole thing, we will also be emailing it to you guys. Cool. So I'm here with my good friend Irvin, also my preferred lender, and we decided to do this webinar and live stream to kind of go over some things that we're currently doing and helping, our active clients buy property while selling and vice versa. So Irvin's really going to take lead here to talk to you guys about what that process looks like. And then obviously I'll give some insight and input on, my side of things and what we should be considering and looking out for.
Well, thanks again, Steph. Excited to do the webinar here. And the big intention is the challenge that we're obviously seeing a lot of homeowners do is that I like to call it they have their property or their equities in equity jail. So they have all this equity that they built from 2021 or below, and then they've outgrown their house. And because there's such low inventory in a tight market and people locked in at low rates, back 2020, 21, there needs to be a solution to help them get into the new house without selling contingent. Again, if they're able to sell contingent, obviously that's going to be your path of least resistance, but not everybody is that kind of market and is in that type of situation. And if that dream home or the home for the next 5 to 10 years comes up, we want to make sure that you don't miss out on that property and you have buyer's remorse and wait another, 6 months, a year for another property that you really want to come up on the market.
Exactly. So can you explain to people the difference between a contingency sale versus a buy sell type of program?
Yeah, 100%. So if you have a contingent sales, like saying, you're going to put an offer on your new property, right? And let's just, for conversation's sake, let's say I want to buy the new property. We'll get an offer for $1 million.
Sorry.
That's okay. I said, just in case you put an offer on the new property that you want for $1 million, contingent means it's contingent on the sale of your departing residence. So you will more than likely want to buy the property in the 45-day to 60-day escrow to give you, the listing agent, time to sell their departing residence. And once they have those funds available, let's say on the departing residence they were going to get $300,000. That $300,000 is going to be used as a down payment to qualify for that property at $1 million. So that's what a contingent sale is. Tell me, and that's the challenge or the solution we're trying to provide here, or the tool, really it is are you seeing contingent offers being accepted in Southern California?
I would say it depends on certain markets. Obviously, if it's a very popular market and they have multiple offers, it also depends on the sale itself, right? And every listing operates very different. I had one that I listed last week, and if we price it right, things move very quickly, and most sellers will not consider a contingency sale. For example, the one I listed last week, we had multiple offers by Monday. So, if you look at that case scenario, obviously a contingency sale wouldn't make sense, right? It wouldn't be like the top option. But if I have another one in Lake Elsinore where it was a little bit slower and we didn't have offers on the table. We were priced a little bit higher, and we did consider a contingent offer. It didn't go well, right? Because that was a contingent offer. upon a contingent offer. And that was a domino effect. Once that buyer for the second contingency didn't qualify, that affected their contingency, which then affected ours. And so that's another reason why many times people don't want to, at least on the listing side, don't want to deal with contingent offers, because you are risking a lot. And there's already a lot of things that happen in a traditional sale as it is, right? And so adding another escrow contingency is difficult to work with, but it's not impossible. But the stars really have to align in order for that to work in today's market. But I would say,
it's a challenge, and it's a lot of anxiety and stress.
Right. Yeah, and that's why you and I talked about offering this solution, which is one that we're actively helping clients with right now, right? We're helping them sell their properties while they're looking at other investment properties, whether it's in California or out of state. As you guys know, now I'm licensed in Florida. So maybe you're having thoughts of buying in Florida, but you're trying to test out the market out there as well. So this is a great solution for that. And we hope that it gives people a lot of options.
No, and I just want to explain the option as well. I want to be thorough about it. It is a very emotional tool, a very emotional program to help you access the property. They're new residents, they're the property they've outgrown it, second home, third home, what have you. So how it works is we can buy the property, your new property, as quickly cash in 10 days. Okay. So we'll buy the property cash in 10 days. Prior to that, we have to get you fully approved up front, right? We got to make sure that you qualify for the loan. So what we'll do is we'll buy the property. Our company will buy it. We'll hold it for your buyer. Let's call him John Soto for conversation's sake, right? I got to throw a name out there. So let's say we buy the property for John. But we do go through a process with him, letting them know, like, hey, we're going to hold this property for you. But A, you got to get approved with us up front. B, we want to make sure that Stephanie has the property ready to sell for you within 30 days. Because we don't want to hold the property for more than 60 days. We will hold the property for up to a year.
Right.
But it's not a profit center for us. So we don't want to be in the business of holding property that we're not going to hold long term. Okay. So once we buy the property from you, or we buy the property for you on your behalf, Steph gets the parting residence ready for you. What'll happen in that time frame, which makes it, for the new resident, we do it close as quickly as 10 days. We can do a 7-day inspection. In those 7 days, we'll do the appraisal. In those 7 days, the buyer will make a decision whether they really want the property or not. Okay. We don't want anybody to have any type of buyer's remorse, because there's a lot of moving pieces that goes into this, in regards to that. We will get an appraisal. We'll make sure that it'll appraise. And in regards to that, there is a 5% earnest money deposit that the buyer would have to provide to escrow for us to hold the property for them. And that earnest money deposit can come from checking or savings. It has to be from some kind of liquid account. Okay. The reason why is, hey, we really want the property, but what happens if we hold a property, then a week later you find a property you like more? So then we're out of pocket the property, and if you don't have any skin in the game, aka the 5% deposit, we're the one that's going to lose it. So it simplifies that. It alleviates all the stress of you having to sell contingent. It alleviates all the stress of trying to get the house ready in 2 weeks, which you probably can, which is going to be stressful anyways. But it also gives you time to move to the new property while we hold it for you. And whether they need the furniture moved out, whether you need to stage the new, like the departing residence, based on new furniture, have it more curb appeal, anything in that regard.
Yeah, so essentially you become the investor for the client and upfront the money for them. Obviously, they still have to provide the 5% EMD to make sure that they're also in good faith wanting to purchase this new property. But I think ideally this buy sell program should be for someone who's also thinking of, listing their property, like you said, within a 30 to 60-day time frame, not something that you're looking to do down the line or a year from now, because it just wouldn't make sense for everyone involved. So if you're having thoughts of selling your current home to buy another property, whether it's an investment property or your primary, then you definitely want to consider this, because it's another option. It's another alternative option to a contingency sale, like we talked about at the beginning, which is already stressful enough. So at least with this option, you know that you just have to come up with the EMD. You have to make sure you get pre-qualified. So you're acting as a traditional buyer, right? You're getting pre-qualified. You're making sure that you qualify for this new purchase. And then Irvin's company basically buys the property for you while you still are trying to figure out how you're going to sell your current home, get that sold, and then move on to the next one. And then hopefully rinse and repeat the process as you're growing your portfolio. And this is something we're actively helping clients with. And, whether it's new or existing clients who are considering, like, maybe they want to sell because they want to upgrade or downgrade, or just buy another investment property. It's really the best option that we think is working in today's market.
Yeah, and other lenders do offer a similar type of program that it's typically brokered out, but they also charge you points. So on $1 million purchase price, 2% or 2 points is $20,000. The convenience. So we don't charge you points to buy the house for you on your behalf. A couple things it is we'll go on a case-by-case basis above $2 million purchase price, depending on the down payment that you're going to get from your departing residence. We will do it on conventional FHA, VA loans, jumbos. We'll even consider it on non-QM type loan products. Mm-hmm. At the end of the day, it just has to make sense, right? And where, we as a lender, where we do make our money to get addresses, when you buy the property back from us, you have to do the loan with us. So unfortunately, if you had a previous relationship with a previous lender, bank, or what have you, we will not go into this agreement with you until you buy the property from us. And you have to make at least 6 mortgage payments. So, and it is a signed agreement. So everybody's very clear on the details of it, so that we don't want there to be any kind of buyer's remorse. We don't want there any to be kind of remiss. We do have, the buyers take an orientation class, which is about 30 minutes with me. So we go everything in very thorough detail before we buy the property for John in this situation on their behalf.
Yeah, I love transparency, because you just set the expectation, and it also helps the buyer/seller understand what the process is for the next 30 to 60 days. In a perfect world, it could take longer than that, but we're actually working on one right now.
Not if you price it right, it shouldn't take longer.
Exactly. If you price it right, and if where you're looking to buy, you understand what the inventory looks like on that side of things too. Like right now, we're actively helping clients sell their property. They're going to buy out of state. But before I even listed the property, I told them to go out there. They flew out to the other state. They got a sense of what inventory looks like, what are houses looking like, what's the price point, what is the inventory? Is there enough? Is there options for them to move out there before we even put their current home on the market? And we're getting close to closing that one in about 45 days, and it could have been done sooner, but we're trying to be mindful of everyone's timeline. So it could happen in 45 days in a perfect world if everything aligns. If you price it right, if you know where you're moving, if you understand what the inventory looks like and the buyer demand in that type of market. One of the things that I also wanted you to talk about was the requirements that I have here on this slide, because that's also important, right? If you're thinking of selling your property, before you sell it, you also have to find out like what you qualify for before you list it, which is something I also had my clients do with you first, right? Before we listed their
Right.
property, we had them get qualified, which I knew they would, but for people who are considering what is that minimum FICO score, term, and all, any other requirements that they should be aware of.
I think obviously minimum FICO, we have it here 680. The thing that is not on here that we do need to bring up is that their departing residence needs to have at least 20% in equity. So if they bought the house in the past 6 months to a year, even in an aggressive market, the equity hasn't been built there,
Right.
So typically it's people, A, to have at least 20% equity, and B, it's for people that have just tired of missing out on getting their offers accepted. That's where the solution provides it, because they're stressed. They're like, hey, I need to get a HELOC. Well, what if the HELOC doesn't get you enough funds for the down payment? What if you need $200K for the down payment, and on the HELOC they'll only qualify you for $100?
Mm-hmm.
Then you're holding the first mortgage payment, then you're holding the HELOC payment, and then they're like, okay, well, now you got to have a third mortgage payment while you sell your departing residence. So it just minimizes these additional expenses that are incurred that sometimes sound good, and people don't really think about the cost of the numbers, and especially writing offers in this non-contingent, low inventory market.
Yeah. I mean, once again, the contingent offers are just not as attractive, right? If you're a seller thinking of selling your home and you have 3 offers on the table, one of them is contingent upon them selling their home, another one is a cash offer, and another one is a conventional 20% down. Which one would you go with, right? And just think about that. If you look at it from that perspective, then you understand why contingency sales are just not as attractive. But I would say for the people who maybe aren't where they need to be as far as credit goes, and maybe they don't have that 20% equity, it's still something to consider, because maybe you have 10 to 15% in equity right now, and maybe your FICO score is in the low 500s low 600s, right? Or high 500s. And we just need to do a couple of things. We do have partners who we work with that will help you get your credit up. And same thing with the appreciation and the equity over time. A year from now or 2 years from now, you should probably, if your goal is to upgrade or make a move during that time frame, now's the time to kind of start lining for that and making sure that your credit is good, and that you're, if you don't know how much equity you have, you can also reach out to me, and I can tell you based on how much you owe, how much the property is worth. And then once we calculate that, then we'll come up with a rough estimate on how much equity you have.
Another point I wanted to bring up too.
Yeah.
Us buying the property cash on your buyer's or John's behalf, for example, you may be able to get the property cheaper. And follow what I'm about to say. So let's say property's listed for $1 million, and we come in and we're like, hey, we'll buy the property for $1 million cash in 10 days, right? But then what if that property goes into a bidding war? What if that goes up to 1.1 with contingencies, right? What if the seller also is in a place where like, hey, I need to unload this property because I need these funds to buy my next property. So I don't want to wait 30, 45 days, potentially get my funds on a contingent offer, which may or may not happen. Or do I get my funds in 10 days cash? And then I can go buy my upline. So then you help the seller's issue with it. They're not having to sell contingent or put the effort contingent. And B, you can save yourself on the purchase price by having a cash offer in hand.
Yeah, that's another added benefit to it. Yeah, I mean, I just think it was great for us to have this conversation to tell people, because a lot of people do want to make a move, whether it's upgrading or downsizing or even, buying another investment property, but the contingency kind of holds them up, right? And so many times understanding that you have other options and other strategies, this is probably your best one. Because most people have equity that they're sitting on. Like you said, it's, what'd you call it?
Equity jail.
Equity jail. I was
You're
going to
stuck,
say
the money's not doing, your property may have gone up 100% in the past 4 or 5 years, but if you can't use the money, it doesn't do you any good.
It's useless. Yeah, you're not leveraging your equity. So that's the other thing that I'm seeing in the marketplace is not everyone has 20, 30, 40% down cash, but they do have it on their property and equity, and they just trying to figure out like, how do I leverage this equity to make my next move? And so that's mainly what we wanted to talk about and come on here and share with you guys. It's something we're actively doing. So if you guys want to have a conversation, whether it's now, 6 months from now, 2 years from now, you should probably talk to us and we can help you set up a game plan and figure out what's the best route. Irvin will handle all the financing. And then on my end, I really focus on the pricing strategy, making sure you're pre-approved with Irvin and how much you're pre-approved for. Where are you moving to and what does inventory look like for you there? What is your property currently worth? And what do we need to do to make sure we maximize the sale of your home, but also make it very streamlined, because that's just one half of the transaction, right? The other half is you finding that new home.
Any other questions, Steph?
Not that I can think of. Let me check here. Instagram Live, no questions yet. I mean, hopefully the presentation kind of answered a lot of the questions that people would have.
Yeah,
but
I'm pretty sure other people have some detailed questions if they want to set up a consultation or a call with me. I'm more than happy to go over that more thoroughly on their custom situation, and obviously see if it's something that it's like a viable solution for them.
Absolutely. Yeah, if anyone has any other questions, like I said, you can add them in the chat or just reach out to Irvin directly or reach out to myself. Our websites are here, irvinlending.com, adugginvestments.org. But either one, whoever you reach out to, we can also put each other in a group chat and we can both talk about that, because whoever you choose to work with, right, you want to make sure that the realtor you're working with and the lender you're working with work as a team. And that's something that Irvin and I have been able to do multiple times, right? It's very important to just know that how the other person works, because that's going to dictate what your experience ends up looking like, 30 to 60 days from now.
And we want the clients to be excited.
Yeah.
We want them to be pumped. It's like, hey, this is the house. Like, do it. Let's figure something out. So you need to buy a cash from me while my house is a hot mess and I need like 30 days to get it ready to list. Right. So we want you to be excited, and it's something that we hand in hand. The whole thing is we
want you guys stressed out.
Yeah.
Yeah, we don't want you guys stressed out, because, selling and buying is already stressful as it is. For people who aren't in this business, you don't do this day to day, you're caught up with life and work and family. But to us, we have a strategy. We know what things should look like on the back end. We understand we're like 2-3 steps ahead. And that's the whole purpose of working with somebody, is to make sure that they help you just streamline the entire process, because it doesn't have to be stressful. If everything goes well and we close the one that we're waiting to close on, we'll share more details and we'll show you guys exactly what we did to make sure that just everything aligned, because it's not just our team, it's also the other agents, the other lender that we might work with, and the other escrow company. Is making sure everyone involved is on the same page is super important. But there's a skill, for that to happen, and it's called communicating. And a lot of people don't do it. So hopefully this is helpful.
People communicate, but not effectively.
Yeah, right. That's true. Yeah, I'm still working on it. All right, guys. Well, thank you so much. Thank you, Irvin. If you guys want to set up a call, just do it, and we'll hopefully have a chat soon.
All righty.
Thanks so much. Bye.